Our next segment begins with Who's on First? The game of accounting. We'll start out with the playing field. In this circumstance, our playing field is actually something we call the control diamond. The batter's box in the control diamond is to establish standards. In the accounting arena, your standard would be to create an estimate for a job or record a budget for your company and then enter it into your accounting system. Of course, you might also establish an operating standard, such as anticipated hours per job stage. After our standards are established, we're going to move over to first base to measure our results. That's where a measurement system, such as an accounting system, comes in again. You record what actually happens. In this case, you'd record financial transactions. After we've done a good job of measuring our results, we're going to second base to compare the two, so that we can see the differences between what we planned and what's actually happened so far. The third base activity is to either take corrective action on the items that are not acting the way we think they should, or to redefine what our standard should actually be. And the notation that you see at the bottom of the screen refers to a process called management by exception. Basically, this is a phrase that means that you want to focus on the areas that are exceptions to the plan. For example, if you see that actual results aren't agreeing with what you anticipated, you're going to focus your time and energy on controlling and managing those aspects of the business or those aspects of the job. The idea is to continue to run these 4 bases month after month, year after year, until you get so good at establishing your standards, measuring your results, and controlling your results that you become a much more profitable and efficient organization. The control diamond looks very simple, but very few companies are actually able to carry all 4 of these steps through on a regular and ongoing basis. But this is your playing field, and you want your company to learn how to run these bases in the most effective and efficient way, and to learn every nuance of the game, so that everyone with a vested interest in your company can play their best game and be declared a winner. So now you can see how your accounting system is really going to pay off when it comes to the home base, by recording your standards, the measuring base, by measuring your financial results, and the comparison base, by providing job estimates versus actual, or budget versus actual reports, so you can see what's truly happening. The third base is a little tougher. Taking corrective action or modifying the standards will be up to you, but you'll have the information that you need to make the tough decisions. I also like to think that this control diamond is one of those game of life applications, as you can use it in your personal life as well as in your business. Lots of my clients leave a version of the control diamond near their desk as a constant reminder that you need to make it through all 4 bases to get that home run. The next aspect of the game of accounting involves equipment, and like most sports, how technology has impacted the equipment and the rules. Okay, so if we're going to view accounting systems as our equipment, we should take a quick look at traditional manual accounting systems. The most basic accounting system, as an example, might be called the checkbook or shoebox method. Back when I was a rookie in an accounting firm, we used to call these box jobs, because the client's work would just arrive in a big box with stacks of rubber-banded bundles of receipts and invoices and scraps of paper and notes on envelopes and sticky notes, etc., all just stacked in there for the entire previous year. Our job was to go through and pull everything out and interpret the strange little cryptic notes and sort all the previous pieces of paper into stacks and run little adding machine tapes and note the results in our spreadsheets. Then we used that information to prepare their tax returns. One of the partners would review our work and deliver the tax return and the good news, bad news results to the client. You know the good news, bad news story, don't you? It goes like this. Here's your return. And the good news is that you don't owe any taxes this year, and the bad news is that you lost a ton of money last year. Or, here's your tax return, and the good news is that you did really well last year, and the bad news is that you owe a ton of taxes this year. So that's one way to create a manual accounting system. Throw everything in a box and let somebody else do it for you and tell you the results next year. Another type of manual accounting approach would be the one-write or spreadsheet style checkbook system, where you have a ledger type book with your checkbook on the left side, and then as you write the check you indicate in a column off to the right how much you're spending and what you're spending it on. Then you run totals for each category of expense by page, and then you add up all the pages at the end of the year to see how much you spent or earned in each category. Another more formal manual system is where you have paper-based subledger books that are posted daily or weekly and are then summarized and periodically posted to a paper-based primary or general ledger. Then reports are prepared based on the totals within each account. So what are the pros and cons of manual systems? I think probably the main advantage is that they're very inexpensive to set up. Paper and pencil don't cost much, and you would want a printing calculator, so we're talking maybe $20 or $30 outlay. If you buy ledger books from an office supply store, you might get as high as $50. Then you might even be able to talk your grandma or your spouse into handling this much of the work for you. What are the disadvantages? It's very difficult and time-consuming to prepare reports or extract information from a system like this. If you want to know how much you spent on a specific job or how much you spent with a specific vendor, you're going to have to sit down with an adding machine tape, a very sharp pencil, and spend some time to come up with the answers. Then you'd need to run another set of numbers to be able to see estimated versus actual results. It's also very easy to fall behind on this type of system and just kind of let it get shoved to the back of the desk where it quickly becomes unmanageable. You can spend a lot of time sorting through papers when you need some information. And of course, this type of system can easily turn into a box job for someone else to take care of.